Saudis are planning a $40 billion AI fund, according to the New York Times reps from the Public Investment Fund in Saudi. This new fund would reportedly invest in AI startups, chip companies, and data centers.
The thing that we're not talking about enough, and I don't understand it well enough, is the entire way in which apps are built needs to fundamentally be rethought from first principles, because you essentially basically have these client-server apps where you have all of this business logic that's sitting back in some server somewhere. And I don't think that that's how apps get built today in a world of AI. And so it doesn't need to work that way. So I don't exactly know what that means, but it just seems like most of the architecture of how the internet works today doesn't make much sense. So that would then support Freeberg's point that all of the kind of the legacy things that we all know and trust also get rebuilt. And so that could create an entire wave where networking value gets recreated and everything. So my gosh, I mean, it could be very, very transformational.
Yeah, I mean, the idea that you would just talk to a computer or in a chat interface and you wouldn't use an app interface. You would just ask it questions, it would give you answers. Ask it questions, it gives you answers. Give it a task, it gives you a result.
First thing is I wouldn't be in a rush to deploy all 40 billion at once, because that's a recipe for spraying a lot of money into unproductive or overhyped things. So I would take my time, first of all. But second, in terms of coming up with a framework, I would think about the different levels of the stack of AI and try to figure out where the value capture is going to be. And I think there's maybe 4 different layers of the stack. First, you've got the silicon, you've got the chips where NVIDIA is dominant. Then you've got the foundation models where it's OpenAI, and then there's some open source models. And then you've got kind of infrastructure, dev tools, vector databases, things like that. And then finally, you have the applications sitting on top of that, which are just getting started. I think it's really hard to know from what we're seeing today exactly who's going to capture the most value in the stack. I mean, you could make an argument for or against pretty much any layer of the stack. I guess if I had 40 billion to deploy, what I would do is try to identify who are the leading companies at each level of the stack, and then who are the most promising challengers. And I would make a bet at every layer so I'm covered. That's not what I personally do, because I'm not, I'm just not a hardware investor. I'm not really an infrastructure investor. I'm more of an application investor. So I'm going to focus on that 4th layer of the stack and just trust that there's going to be enough value there. But again, if I was managing a $40 billion sovereign wealth fund, then I would play at every single level. And I would hire the best people who know each layer of that stack.
The bottom 3 stacks are very difficult right now to find a footing. Obviously, I think Sachs, it's I think the generally accepted framework for how to think about how the market is broken apart. But on the application side, I think is where you could think about finding more traditional business model advantages. And is there a business that's working there and that is scalable? Vertical solutions in labor and automation and productivity gains are probably the best Sharpe ratio. Good alpha, lower beta, and a good place to kind of deploy. Competing in chips, competing in infrastructure, competing in models. It's such a, as we just talked about with respect to what happened with Inflection and Microsoft this week, it's such a rapidly changing environment. It's hard to have high confidence in where things are headed there. So I do think that we do know that there are enterprise markets. We know that there are segments of things like food, medicine, manufacturing. These are markets that aren't going anywhere. And they could all certainly benefit from unlocks in software or in robotics and automation and hardware. So that's probably where I would think about concentrating capital. But 40 billion is a lot of money. So you'd probably think about deploying it over what period of time? Is it 10 billion a year over 4 years? And then is it broken apart in what way over those sectors and over what geographies? And then find good managers to help you get it deployed.
The most important thing that fund managers get wrong is not having appropriate reserves for your winners. And if I look back, the real profit dollars that I leaked was not investing enough upfront, but when I didn't have enough reserve to do the full pro rata or even super pro rata in the ones that worked. So the first thing you have to do, and when I do the regression on all of my funds, you really need to reserve between 40 and 50% of a total fund size for reserves. So take 20 billion off the table. And now you have a smaller problem, which is how do you deploy 20 billion? Because the other 20 billion is purely meant for the winners, where you cram the money into the few that are winning so that you can make the most money. Now you've scoped the problem to 20 billion is in reserves, 15 billion of it is tied up in credits. And then the 5 billion, I do think it's what David said, what Sachs said, which is $1.5 billion to the hardware, $1.5 billion to infrastructure, $1.5 billion to some of these discrete ideas.
Since everyone kind of seems to agree with the framework of the 4 levels of the stack, where do you guys think the value capture is going to be? Do you think it's going to be by the chip companies, the foundation model companies, the infrastructure companies, or the applications?
I'll actually change my answer in a little bit. I don't think it's necessarily new technology companies per se that are going to benefit most, but I think that it's businesses in traditional industries that are going to be able to leverage these tools, whether they're using open source tools or third-party technology capabilities that they're buying as a service or as a piece of software. There's an incredible set of advances that are going to be realized in things like chemical manufacturing, drugs, general manufacturing that have existing scale and infrastructure that are the fastest to move to adopt these technologies are going to benefit the most. And I think that's probably where most of the value will accrue, is not necessarily a chip company, but in other businesses in traditional industries that can transform themselves using AI.
So your answer is at the application
level, yeah.
And then within application level, you could divide it up between existing companies and startups.
Yeah.
And existing companies that are able to leverage AI innovations that are lower in the stack.
Another way to answer your question, Sachs, is which spaces are the most crowded already? And so obviously chips are super crowded, lots of incumbents, lots of people going after it. And the foundation models are very crowded as well. And the application level is yet to sort of be built out, right? Because we're in year 0 or year 1 of that. So I do think application level is where there's a lot of value. But I also think the hosting and the development of these various niche models is going to be a huge opportunity. So just, once again, those open source models being put into cloud computing environments and optimized, that could be a whole new level of AWS's and Google Cloud and Azure's. So there's an opportunity for somebody to compete with those incumbents by just being better at those models that are open source and having the team that's doing those updates and then optimizing that cloud. So I would go with the cloud level for those open source models and providing that as a service like VMware does or other folks do. WordPress would be a tiny example of an open source project like that. And then something tells me this robotics space, which has been a false start over and over and over again, I think this is the time where actually it's going to work. And so I love that hardware robotics space for AI.
I think you're right, Sachs. I think it's kind of bookended in my mind. I think the folks that are building fundamental hardware will make a lot of money over the next 5 to 10 years. And then the folks that are building the fundamental application level experiences will make a lot of money as well. And then who knows? This is
pretty
why
compelling. Yeah.
This is why like Saudi needs to basically make a bet that there's just developers that are swarming around ideas. Let them show you what's happening, because paying $800 million a year of fees is not the best way to generate a return on $40 billion if this is where you want to be investing, I don't think.
Yeah.
$800 million could pay for a lot of credits, which probably gets you one step closer to the answer.